Ladies and gentlemen, good day and welcome to the United Drilling Tools Limited Q4 FY22 and FY22 earnings conference call hosted by Anand Rathi Share and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to Mr. Rahul Jain from Anand Rathi Share and Stock Brokers. Thank you, and over to you, sir.
Thank you, Melissa. On behalf of Anand Rathi Shares and Stock Brokers, I would welcome everyone to Q4 FY22 and FY22 earnings call of United Drilling Tools Limited. From the management side, we have Mr. Pramod Gupta, CMD, Dr. Concall Gupta, Executive Director, Mr. Mukesh Mehta, CFO, and Mr. Navin Bhatnagar, Company Secretary. We will start with the opening remarks from the management side regarding the company brief, its presence in the industry, the result, and post which we will open the floor for Q&A. Over to you, sir.
Good afternoon to all participants, and we thank you for your time and interest in UDTL. I am Dr. Concall Gupta, Executive Director of United Drilling Tools. We would like to also thank Anand Rathi Share and Stock Brokers and Mr. Rahul Jain for organizing this event. During the course of this conference call, there could be discussions which could be forward-looking statements regarding trends, our strategies, and the anticipated performance of the business. These forward-looking statements are based on management's current views and expectations and are subject to various unforeseen risks and uncertainties, including those related to the impacts of COVID-19 on our business, the oil and gas industry, and the global economic conditions. Our actual results may differ materially in any such event. We believe that you would all have a preliminary understanding about our business and operations, but I would like to present a brief about United Drilling Tools Limited. UDT is a global manufacturer of high-quality, precision-engineered products in upstream oil and gas exploration. It is a single manufacturer of several oil drilling items such as wireline winches, stabilizers, and large OD multi-start connectors in India. It is a solution provider with presence in downhole tools, wireline, well service equipment, and gas lift equipment. This has led to a 60% market share in the upstream drilling tools and equipment market in India. A good pedigree management with 4 decades of deep industry experience of servicing in the oil exploration and production sector. The company has 4 state-of-the-art technology-focused manufacturing facilities across Gujarat and Noida. The company has an integrated value chain from being a stabilizer manufacturer to manufacturing various oil field drilling and production products. The revenue breakup is 68% casing pipe and connectors, 10% gas lift valves and mandrels, 3% stabilizers, and 19% wireline winches. The key developments during the last financial year, there was development of new product lines such as side pocket mandrels, swift connectors, and link connectors, which have a demand in India and overseas markets. The copy of the press release may be viewed in the exchanges. We have got the design patented, registered in UK for multi-start casing pipe connectors, metal-to-metal steel casing pipe connectors, and weight set casing pipe connectors, registration of which is valid for a period of 5 years. Copy of the press release may be viewed on exchanges. We have appointed marketing representatives in Egypt, Libya, Vietnam to promote our products and expand our market base in these countries. Recently, we have also appointed new marketing representatives in Kuwait region. Registration and local approvals for the new upcoming project in Gujarat near Mudrapur have already been completed, and we have started the construction process. The future business strategies include increasing registrations in the international market, adding footprint in Southeast Asia, Middle East, Russia, and South America, scaling capacities of all new product lines, increase product range by organic and inorganic routes, reduce cost of production, and enhance revenue potential and profit margins. I would like to ask Mr. Mukesh Mehta for the key financial performance highlights.
Thank you, sir. Good afternoon, everyone. We shall be taking first the annual performance, thereafter the Q4 performance. of our company. So we are pleased to inform that we have achieved a turnover of 166.42 CR, which is more than 14% more than the previous years. And our EBITDA margin is 75. EBITDA is 75, which is more than 76% of the previous year, which was 42.70. And the margin is last year it was 29%, which is increased to 45.16. The PBT is 71.64 CR, and which is more than 83% of the last year, which was 39.10. And PAT is 50.36 CR, which is more than 54% of the previous year, which is 32.70. And the PAT margin last year was 22, this year it's 30.26. And earnings per share is 24.80 of the current year. Previous year it was 16.09. Now I will take up the Q4 results. Our net income is 40 CR, which is less than 15% of the previous Q4 21, which was 47.38. And EBITDA has increased from 5.95 to 12.16, which is more than 100%. And EBITDA margin of the last quarter 21 was 12.56, which is increased to 30.35. And PBT of the previous quarter was 5.03, which is now increased to 11.13. PAT in the last quarter of 21 was 4.1, which is increased to 8.11 in the current year. And PAT margin of the last Q4 21 was 8.80, which is increased to 20.24. And earning per share of the Q4 22 is 4, whereas in the Q4 21 is the 2.06. In the current year, we have paid dividend of 21%. We have just repeated. Last year also we paid 21% dividend to the shareholders. And we have saved the overheads. In the last year, it was 27 CR. Now it is reduced to 25, saving of about 2 crore despite inflation. Now I transfer the call to Dr. Kannal Gupta for Q&A session.
Yes, thank you, Nataji. We for the question and answers round. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Ritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, in the past calls that we have done, we were looking at a close to about 180 crore type revenue. What we delivered is about 165 crores for the full year. Any comments there? That's my first question. Second is from the cash flow. I see some cash flow being used for loans and advances and non-current assets. If you could help us understand where is this, what is this in the balance sheet? And my third question is about your capacity, which is supposed to come in Kandla, when it is now slated to come, and what kind of revenue growth do you see in FY23?
Okay.
Actually, turnover of the 183, 164.
Yeah. Sir, actually, we have, consolidated, these 166 crore is only for United Drilling Tools, and we have a 100% owned subsidiary, P Mittal, and their turnover is around 10 crore rupees. So the total turnover we have achieved is 175 or 176 crores. And so we are very close to what we were estimating. And the major reason for our turnover to be little less is that there was, as all of us know, that there was big problem in the fourth quarter of this year because of the war between Russia and Ukraine. So availability of steel items and steel items manufactured from steel were delayed quite a bit. So that has affected our revenues to some extent. So that was the main reason why we were slightly short of our targets. That is the answer to your first question.
And the second question, you have said that cash flow is used for loans and advances. So,
and other current assets, other non-current assets.
Pardon?
So if you see the cash flow, there is utilization in other current assets and loans and advances to the extent of 16, 17 crores.
Yeah, loans and advances have been increased from 2 CR to 10 CR. It is because of we have paid the amount to the vendors relating to the Mudra projects. We paid for land, we paid around 4 CR, and we paid for assets, Mudra assets to the vendors. That's why it has been increased. Plus, we have increased our turnover, and we have to pay the advance to the vendors also. That's why it has been increased.
And what sits in other non-current assets? Other current assets?
Other current assets?
5 crores going to 13 crores.
That I will check and let you know.
Okay.
That other current assets. Or during session I can tell you.
Okay. And my third question was on Kandla plant status and the growth that you expect, and where are we on these marketing representatives that we have appointed? Where are we on the sales cycle?
Well, regarding the Kandla plant, we have started the construction there, and we hope to complete the building of the plant by the end of this year. That is financial year, 31st March 2023. And this plant will increase our capacity, as has been indicated before, to almost our capacity will be double of what 300 crores. It will add to our capacity. Is there any other question in this?
No, in this there is no question. The question is, what kind of growth do you expect in 23, and where are we on the terms of sales cycle with all these marketing representatives that we have appointed, all those press releases that we spent?
Right. We are hoping an increase of around 35 to 40% in our turnover during this year. And we are previously, getting like export orders to the extent of 1 crore from here, 1 crore from there. Now, by appointing these representatives, our export orders are now increasing, from 1 crore. Now we are getting like orders in the lumps of 3 to 4 crores each. So, these representatives are helping us quite a bit, and now this will grow during this year or in next year from 4 to 5 crores to 10 crores and then to 20 crores. That's how we see our growth coming. Yeah, and we are also getting repeated orders from, the same companies, service companies and the oil drilling companies.
Okay. What is the visibility that you have for this 35-40% increase in revenue in terms of backlog or any other indicator, if you could share?
I'm sorry, what is the visibility?
what is the visibility that you have for this 35 to 40% growth in revenues in FY23 based on whatever order backlog, any indication or, any other indication that you can help us understand this 35-40% growth?
Yes, because you see, we are because of these higher crude prices in the international market, we are getting quite a bit more of the inquiries internationally. And our domestic, we are getting a lot of inquiries from domestic customers also. We are bidding, lot more on the jobs. So based on that, we are expecting that we will get this kind of a growth.
Okay. And margin?
Margins will be what they are now or better than what they are at present.
Okay. Thank you, sir.
You're welcome.
Thank you. We have the next question from the line of Keval Ashar from DSP Investment Managers. Please go ahead.
Hello, am I audible?
Yes, please go ahead, sir.
Yeah, thanks for the opportunity. So, sir, a few questions from my side. First is, are we looking for any inorganic acquisition in foreign markets which can get us a direct entry into those geographies?
Sorry, can you please repeat the question again?
Yeah, sure. So, are we looking for any inorganic acquisition in international markets which can help us get direct entry into those geographies?
Yes, actually we are still discussing, with a couple of companies in Europe to, if we can get acquisition of them, but it is still in early stages. If we get success in that, then definitely we will have a direct, availability of European markets here.
Got it, sir. So the second question is regarding your targets for FY26 was 600 to 650 crores of revenue. So which would be the major product that would be driving this growth?
Looking at the present situation, the growth is in all our products. We are getting a lot more inquiries from all the products which we are manufacturing.
Okay, got it. So, sir, looking at your balance sheet, there is 14 CR in CWIP. So, is it for Mundra plant or are we spending it on something else as well?
14 CR?
Is on in your CWIP?
No, actually, we have bought the property in Noida. That's office, around 13 CR. Plus, we input some job, and that also is shown in capital working capital. This is not related to anything.
Okay, sir. And what would be the total cost of setup in your Mundra plant? What would be the capex size?
At 30 CR, and we have already spent 20 CR.
Okay, got it. Sir, your margins have inched up to 44% in this FY22. What would it be on a sustainable basis?
What? You can speak a little louder, please.
Your margins have been inched up to 44% in this financial year. What would be the margins on sustainable basis?
It's around 35 to 45%. These are sustainable.
Okay, got it. And last question is in similar lines to the previous participant regarding what's the reason for increasing our other current assets as well as loans and advances? If you can just throw some light on this.
Our current assets have been increased due to increase in the inventory. Because in the beginning of the last quarter...
Sir, there's a portion called other current assets.
I will let you know. The first query also came, and I will check and let you know. In other current assets.
Sure. Got it, and all the best for the coming years. Thanks.
Thank you.
Thank you. We have the next question from the line of Ashish Kacholia from Lucky Investment. Please go ahead.
Yeah, good afternoon, sir. Could you just explain the inventory number? Yeah, could you just explain the inventory number of 110 crores on a sale of 175 crores? What is the reason for such a high inventory? And last year it was much lower.
Actually, in the beginning of the last quarter, we faced some problems in procuring our raw material because of the Ukraine crisis and some instability in the price of the steel. So after that, we made the orders for all our materials required for the main products. That's why it increased the inventory. And our turnover has also gone up, so we need to keep some inventory also. So we keep the inventory of the products which are commonly saleable every year.
I would like to add one more thing, that since the oil prices have gone up, the international market, the way how the trend is coming, that they require shorter delivery periods, which is maximum 3 to 4 weeks. And since our manufacturing time of the products is 4 to 6 months, we have had to, that is the reason why there is increase in inventory, and we have finished goods which as soon as the order comes within 3 to 4 weeks we have to deliver to them.
Okay, so is this the new normal? Should we assume that you will be carrying inventories of 7-8 months in your business? That is what we should assume in our financial model.
For 4 to 6 months, yes, that is what will be seen right now.
Okay, so 6 महीने का लेके चलते हैं, ठीक है sir. All right.
Thank you.
Thank you very much, sir. All the very best.
Thank you. We have the next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My question is on the submitted bids, which you have mentioned as 300 crore for FY23. So what was this number for FY22? Just to understand what is the increase.
I'm sorry, we will have to check that and we'll have to get back to you on that.
Sure, sir. And out of this 300 crore, if you can talk about how much is domestic market versus export market?
So around about 200 crores is around about domestic and 100 crores is export.
Sure. And the confirmed orders of 100 crore, how if you can split in terms of domestic and export?
The 80 to 85 crores is domestic and 15 crores is export.
So, sir, in terms of conversion, what kind of conversion do you think we can get in export market? So, out of 100 crore which we have bid.
So our conversion rate is around 50 to 60% in domestic, and in export it is around 20 to 30%.
Okay. And given we have increased the number of people in different countries, I have appointed.
Yes.
So,
newer requirements, because the oil prices are so good right now that newer projects are coming and newer requirements are coming. So that is why we have seen a dramatic increase in the amount of inquiries which are coming on a weekly basis.
Sure, sir. And out of this 100 crore export, is it any specific geography focus for FY23? So we among the 4-5 countries which we are targeting.
Yes, we Middle East and primarily Egypt, Libya and Vietnam. We are expecting orders, quite a bit of orders from there, and Russia also. We are getting a lot of inquiries from Russia for supplying the products that we manufacture.
So, out of the 100 crore bids which we have done, we have already done some bids for Russia?
There is some, yes.
And sir, if you can talk about how frequently such bids happen. So, for example, we have already submitted for 300 crore, but every quarter, every few months, there will be newer orders, newer bids. If you can talk about the cycle.
So usually what happens is that any nationalized company would would define that the amount of wells they are going to drill in a particular year. And similarly, the private E&P companies, because whatever the government has mandated them that this is the minimum, the oil and gas production you have to do. For example, I'll take India. Now, India only manufactures 17% of the total oil and crude oil requirement that they have. So the government has mandated you have to increase it from 17% to 23%. That defines that for ONGC, Oil India, and all the various private E&P companies like TN, HOEC, Reliance, that you have to increase the number of wells produced. Like ONGC has got approximately 500 wells mandate that they have to drill every year. Based on that, similarly, the private companies also come out that whether they want to drill 100 wells or 150 wells per year. That's fine. So the timing differs from company to company whenever their requirement comes, and similarly we see these requirements generating, which also defines the type of product what we manufacture and the supply, and we have to supply.
Sir, on the cycle part itself, so is it for the 1 year this bid, we have to complete the bid in the same year itself? What is the normal timeline for completion of such projects or bids?
Excuse me, sir. What do you exactly mean by the cycle time? Cycle time of our product or cycle time of the customer?
No. First, so if, for example, we have a confirmed order of 100 crores in hand. So this 100 crores, if we get a new order for the bids we have already submitted, so that order has to be completed in the next 3 months, 6 months. What is the typical time from getting the bid to completion of the order?
Yeah. Well, it varies from customer to customer. If it is a domestic national oil company like ONGC or Oil India, they usually give us a timeline of 6 months. But most of the private E&P companies or service companies, they give us the timeline of say 3 to 4 weeks or 5 weeks. So it varies from where the order is coming.
Sure, sir. And
does that answer your question, sir?
Yes, that helps. On the orders which we have submitted in the domestic market first, so how many players are we seeing as our competition in these 200 crore bids?
Well, it depends from our product to product. Like wireline winches, there is no competitor. Same thing for stabilizers or connectors. But if we look at gas lift valves, there's one more company who is our competitor, and in casing pipes we have 2-3 companies who are our competitors.
Sure, sir. And this government policy of 200 crore, lower than 200 crore will be to the domestic companies. Has it already been implemented? Has it started helping companies like ours?
Yeah, it has been implemented, and it is very much going on, and it is helping us also quite a bit, because now we don't have any international competition. Only competition we have is with the Indian companies, and since 2-3 product lines we are the only one, so there is no competition in that.
Yeah. Even in the Indian companies, like you had explained nicely last time, we will be the supplier of the main connectors. Because the pipes they can do, but connectors, or do they also import from outside?
No, they cannot import connectors from outside. They have to buy from the Indian company.
So every out of the 200 crore order, every product, even if we don't win, we'll have some portion to supply to the competitor also.
That is true. Yes, please.
Yes, sir. On the international scale, obviously we are a newer player. There will be much bigger players, and we are maybe competing for smaller orders. But typically, when we have bid for this 100 crore orders, how many players do we see as the competitors?
On an average, there are three to four players, on an international basis. Sometimes it's 2 or 3, depends, because nowadays everybody is very busy, so not everybody is bidding for every job. So I would say 3 to 4 companies are always bidding the jobs, in the international market.
Sure, sir. And we have talked about 30 to 40% targeted growth for FY23. So if you can divide it in terms of these 3-4 main products which we have, where are we seeing, what kind of growth are we seeing in, say, connectors versus GLB versus other products?
I think that growth is all in all the products. It's very difficult to say which product has more or less because it's too early at present. But I would say generally the growth is in all our products. We are getting bids for all the products. We are getting orders for all the products. So we'll probably know more clear in next 6 months.
Sure, sir. And for the final question on the international market, so, sir, are we planning to increase the number of bids which we are targeting going forward as well? So for FY23, you have talked about we have bid 100 crore, we will win 20-30%. But given the scale, are there any geographies still which we haven't reached? If you can talk about the scaling of orders which we are bidding in international market going forward.
Well, you are asking if there are any geographies where we have not still penetrated, and there are some geographies where we are, now going recently. Like in South America, we are tying up Brazil, to be exact. We are tying up with somebody for, so that they can represent us there. Kuwait is another one. So we are, going wherever we can get the order. UAE also we have UAE, Kanal is telling me that UAE is also one of the places where, we are trying to get the order.
And my other part was that, so if we have bid 100 crore this year, do we think we have the capacity and even the product offering to increase this 100 crore bid for FY23 to say 150, 200, 250 crore in the next 2-3 years in international market?
Yes, sure. Yes, please. That's why we are in, building our plant in Mudra, Bangalore Mudra, so that we have enough capacity to satisfy, the requirement, future requirements which will be coming.
But sir, that is only a 30 crore capex, right? So with 30 crore capex, we can say increase our bids and the production for export by 2x, 3x.
You're saying with 30 crore capex, can we increase our production to 300 crores? Is that what you're asking, please?
Yeah. So that was the question, because export, we are targeting big things in export, and domestic, obviously, this year we are doing well. But if we have to bid for 200, 300 crores, then Will the expansion we have done for 30 crore, is it enough, or 30 crore pay what peak revenue we can do, or after then we have to do another capex? If you can talk about this.
Well, our present estimates are what you are saying, that our capex will be 30 crores and we will achieve a revenue of 300 crores. But, our capex may increase, somewhat, maybe another 10 crore or so. But I don't think it will be more than, 40 to 45 crores,
So that should be enough for next 3 years.
Mr. Vijay, I'm sorry to interrupt, but we have participants waiting in the queue, sir.
Yeah.
If you can come back,
that
please.
was it. That was it from my side. Thank you.
Thank you.
We have the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, I have two follow-up. One, on the capex side, so you mentioned that in the CWIP, there is a asset on Noida of 14 crores. So can you tell us what is this asset of 14 crores, and there is a 30 crore capex to be incurred on Kandla, for which you have given some loans and advances for land and machinery and all. So what is this Noida capex about?
We have, purchased a new office in Noida in Supertech, which is one of the, largest builders in this area. They are building the tallest building in NCR, which is 72 stories.
110.
110 stories, probably the tallest building in India. So we have got an office in there. Yes,
Okay.
Corporate office. Yes, please.
What is the total capex there on the corporate office?
It is around, I think 12 crores was the area which we got there, and about 2 crores we have, to put the furniture and everything. So 14 crores approximately.
Okay. And sir, my second question is, when you mentioned that the lead time now to supply the orders is just 4 to 6 weeks, which was earlier a larger lead time. So is it fair to assume then that the market is actually fairly buoyant with, lower lead supply time? So the revenue acceleration can be really stronger in the near term. That's how we should understand. And when you mention about this inventory answer, is it a phenomena which is current where you need to maintain these 5-6 months of inventory, or it's a phenomena which is now going to last much longer, and hence this 5-6 months of inventory will continue? It's both ways, right?
I think it will continue because the way oil prices are going, and so people are drilling more and more oil wells, and there were wells which they have closed down. Now they are again reopening those. So the requirement for the equipment is pretty good, and it will increase. So they need the equipment immediately, really.
So it also means a faster sales growth, right?
Yes.
Right. It also means that.
Right. Yes, please. But the impact will come like in the second or third quarter of this year.
Okay. And why not in the immediate quarter?
No, some will come in the immediate quarter also.
Okay.
But see that the oil prices have increased. Now that starts the thinking. The oil companies management start thinking that we have to drill more or reopen the wells more. So that takes time, and then by the time it filters down to the level where they are ordering the new equipment, that time gap is there, of about 5 to 6 months.
And is there any seasonality element in what you supply in quarter 1 to what you supply in quarter 2, quarter 3, quarter 4? Is there any seasonality in business or seasonality in the product?
Yeah, seasonality. See, there is not a particular pattern as such.
Okay.
But, it always happens that one quarter there's more sales than in the other quarter. And there are various reasons for that, One is the orders, the other is a lot of time. If like that's what happened in the fourth quarter with us, that the steel was not available in India at all, because there was war between Ukraine and Russia, and Ukraine was the largest supplier of steel to Europe, and they stopped supplying steel to Europe. So European companies were buying steel from Indian steel mills. So in India there was a big shortage of steel, But now that situation is improving.
And our raw material is imported, or we can depend on local material?
No, well, almost 70 to 75% of the raw material we procure from India.
Okay.
And 25% we import. But this is what I am telling, what was happening with the domestic producers of steel, because they were getting better prices by exporting to Europe, so they were not supplying to domestic markets.
Okay. Thank you very much, sir.
Thank you.
Thank you. We have the next question from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. How much percentage of our sales would be exporting to US?
Well, we are getting some inquiries from US, but at present we don't have much as a matter of any sales to US, But we are hoping to get some sales in this year to US also.
Okay. And last question would be, do we have some operations in Bhilwara?
Bhilwara?
Yeah.
No.
So
except that
our auditors are from Bhilwara, so I could not get the rationale behind that.
Yeah, our statutory auditor is from Bhilwara.
Yeah. So generally, what we have seen in companies is where the plant is located, the auditors belong to that city only. So do they have some other offices, or signing partner is sitting over there, or how is it like?
No, yeah, they have office in Delhi also. It's R.S. Dhani and Company. They have offices in Delhi as well as Bhilwara both.
Okay, that's great. Okay, thanks a lot. Yeah.
Sure.
Thank you. We have the next question from the line of Keval Ashar from DSP Investment Managers. Please go ahead.
Yeah, thanks for the follow-up. Just one question, sir. How much time does it take for our products to get approved in the international markets? And second is, in how many countries have we already got our products approved?
Can you please repeat your first question, please?
Yeah, sure. How much time does it take for our products to get approved in the international markets?
Well, it depends from customer to customer.
Okay.
Some customers take longer time and some take less time. But I would say approximately 6 months to a year for national oil companies. But it is faster with the service companies. It will take about 3 to 4 months. By service companies, I mean companies like Halliburton, Schlumberger, Baker Hughes. They are, like multi-billion-dollar service companies.
Got it, sir. And the second question was, in how many countries have we already got our products approved as of now?
I would say that we are already supplying now to about 6-7 countries where our products are approved.
Got it, sir. And in FY23, how much percentage of our revenues can come from exports? Any targets for that?
Any target for that? Is that what you have asked?
Yeah.
Or what we are doing now?
No, sir. In FY23, how much percentage of revenue you expect from exports?
Exports. 23. In FY23. I would say around 15 to 20%.
Okay, sir. Got it. Thanks.
Thank you.
Thank you. Before we move to the next question, management, the current speaker cannot be heard very clear. The audio is slightly muffled, so if you could come a little close to the instrument.
Sure.
Thank you.
Sure. Thank you, ma'am.
Thank you, sir. We have the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead. Mr.
Yeah,
Saket.
thank you. Namaskar, sir, and thank you for the opportunity. Sir, firstly, sir, are the products also required in the shale gas exploration?
Some of these products, like gas lift valves, are required in shale production.
In shale gas exploration also?
Yes, please.
And out of the total revenue, what percentage goes to is contributed to that product, sir?
How much is it for gas lift valve? It's about, I think, 80%.
That's about around 10%.
Yeah, about 10%, please.
About 10%. And here also, sir, we are seeing growth coming up. I think the more and more well for shale gas exploration is also seeing an uptick. But what is the update on that?
I haven't heard much about shale gas because shale gas, the largest producer is US. And so we can check it and reply you back, please.
Correct. And sir, currently, what is our taxation rate, sir? Are we still there in the old regime? And what you could give some clarity?
But actually, yeah, it's a good question. See, our tax rate till last year or year before last? Till last year was 19%. We were only paying net. This year, we have come into regular tax regime, but we have, because our units were in SEZ, so we have a lot of, tax available to us in last 5 years. And so our current tax for this year, FY22, is also coming to be around 19%. Even though our P&L shows that we are paying 29%, but in income tax returns, we are paying 19% because we are taking the credit back. We are adjusting the MAT receivable.
So we will stay in the old regime only. So the total direct taxes paid in your cash flow works out to around 21 crore. So that will have some prior period also pertaining to previous year also, I think. 21 crore has been totally paid.
That includes some deferred taxation also. So our current rate is 29%, but we shall pay 19% currently, and 10% will be adjusted against the MAT receivable, which we have paid in the last 5 to 6 years. Because earlier our revenue were exempt from income tax. So we just were paying the MAT as required by the Income Tax Act. And that's receivable against the profit of the subsequent year.
Sir, could you explain and come closer to the mic, sir? I am unable to hear you. What was the exemption from the income tax earlier and when
under Section 10AA, sales from SEZ are exempt under Section 10AA of Income Tax Act. So we were selling the products from SEZ. So those were exempt. So we need to pay only MAT earlier years. So now we have, since our turnovers are from DTA unit, so we have come under the regime of income tax at the rate of 29%. So we shall still paying to the government authority at the rate of 19%. 10% will be adjusted again as paid in the earlier year. Now it's clear?
Okay. And still, sir, we are selling from the SEZ also, since it was earlier it was exempted, or the sales from SEZ has now stopped? I'm not getting that.
Now also, and we are selling some part is also sold from the SEZ.
But most of it is being sold now from the domestic unit.
From the domestic unit. Correct, sir. And just a second, sir. So for this inventory part, if I heard you correctly, it is the small lead time because of which you have built up a large inventory. If we take the full year number, it is around 65 crore inventory that we have. So we will be continuing with this inventory going forward also, since we are expecting our turnover to improve by 35% this year.
Well, yes, our inventory will have to continue to keep larger inventory, and the reason, like we have explained, that a lot of our orders, they demand early delivery period, which is like 4 to 6 weeks. But our turnaround time, manufacturing turnaround time of our product is 4 to 6 months. So that is why we have to build up larger inventory to fulfill the requirement of our customers.
So my point was, we'll need to carry this inventory along. The older one will get replenished as the order executed, and the newer inventory will get piled up. जो 65 करोड़ रुपया है सर, ये वर्किंग कैपिटल का आपका ये इन्वॉल्व रहेगा थ्रू आउट द ईयर?
हाँ जी, हाँ बिल्कुल रहेगा.
Sir, you mentioned about giving employment to more people. We are now recruiting, but the employee cost benefit has gone down year on year also for the entire year, from 13 crore to 10.82, and even quarter on quarter also. So please explain and what should be the annual number for the employee benefit expenses?
Yeah. Well, I'm not sure actually. I'll have to say. You are saying that our employee cost has gone down?
Yes, sir. Yes, sir.
Employee cost has gone down, but it varies from 8 to 10% every year.
Yes.
And actually, in the last year, I've taken a pay cut, to be honest with you. So that might have made an impact on that.
So I didn't get you.
Half actually.
So please come again. I'm unable to hear you. Please come closer to the mic.
No, I was just joking. I was just joking about it. But you see, it is sometimes we find people at a better salary than the last year. Last year actually, because of COVID, the casual labor which we were hiring was at a much higher price. Almost we were paying double the price. And this year, the COVID has been reduced quite a bit, so that might have made an impact. We can recheck into that and reply you back on that. But these are some of the reasons we can think that our employment cost is less.
Sir, last 2 points. Firstly, sir, if we take this, ma'am, if I could just conclude my. Yes, ma'am.
Actually, we have participants waiting, sir.
Okay, ma'am, I'll come in the queue. Yes,
sure.
Thank you, ma'am.
Thank you. We have the next question from the line of S. Chatterjee from Asterisk. Please go ahead.
Thank you for the opportunity, sir. I have a question regarding the new products which are being developed, and what is the opportunity size, and when can we see those products getting into market? I mean, pocket manual, switch connectors, these products.
Can you please repeat the question?
I'm saying we are developing some new products like pocket manual, switch connectors, etc. When would we expect to see these products getting commercialized, and what is the opportunity size?
I will say in third quarter of this year. That is first, third quarter is October. Third quarter is October to December.
Okay, and what is the revenue potential?
Revenue potential, you see, all these things will add to our revenues, and like the figures which we are giving, we are hoping that all these things will increase our revenues in the current year by 35 to 40%, to 250 crores.
So I would like to add that, for example, the links type of connector that we have developed, it is primarily for the Russian market, and that would get approximately a revenue of around about 80 to 100 crores.
No. It's about 20 to 25 crores. Hello?
Hello?
Anji. So, I think, see, all this development of all these products will give us the revenues which we are expecting, around 250 crores this year.
Okay. And what was our export contribution this year, FY22?
Can you please, sorry, this voice is breaking up. Can you please repeat that again?
I'm saying, what was the revenue contribution in FY22, export contribution?
For export consumption?
What was the export contribution in this year, FY22?
I will have to check. 15% in FY22. It is around 15%.
And for the next year also, you are guiding for 15 to 20%.
Yes, please, 15 to 20%.
Okay. But with the representatives you are employing and deputing, I thought the export will ramp up faster.
Actually, for this year, sir, we need to check that. If we will correct it. I just told you on the top of my head. Yeah, if there is any changes, we will correct and communicate to you. Okay.
Okay. Thank you.
Thank you. We have the next question from the line of Manav Vijay from Deep Financial Consultants. Please go ahead.
Yes, thank you very much for the opportunity, sir. I have a couple of questions. First of all, so regarding the high inventory that you are carrying, so some orders of Q4 got shifted to Q1. Is that also a reason for higher inventory?
Yes, please. Yes.
Possible to quantify that, sir? How much that was?
I would say about 15 crores, around 15 to 20, around 15 crores.
Okay. My second question would be, sir, again regarding the high inventory only. So of the 115 crores of inventory that you are carrying, would it be possible for you to break this down into what kind of raw material do you have and what kind of finished goods inventory you will have in that stockpile?
You're saying currently?
Yes, sir.
How much?
Q4.
Yeah, we'll have to check and we can convey that to you.
Sure. Okay. My next question would be, sir, regarding the CWIP that you have, 19 crores, whether I look at the standalone or at the console level, 18.9 crore. Now, 12 to 13 crores is what you have of the office space that you bought in Noida. And somewhere during the conversation, it was also mentioned that roughly 20 crores has been spent on the upcoming plant in Mundra. 20 plus 13 makes it around 33, 34. Whereas CWIP is only 19 crores. Numbers don't add up, sir.
No, let me clear that you see, the office which we bought in Noida, that is around 14 crores. Nataji, please correct me if I'm wrong.
Yeah, correct.
So that is not included in the CAPEX, which we are saying for new plants in Mundra, or we have we have made a plant in Noida SEZ, which
15 crore.
Yeah. So in this SEZ. So around 14 to 15 crores were spent there, and now Mundra plant, we are expecting to spend 15 crores in Mundra plant, for which the construction has already started. So that is how the breakup is.
So sir, in that case,
Vijay, I'm sorry to interrupt, but we'll have to move to the next question, sir. There are participants waiting.
Madam, this is actually my first question.
Okay, please proceed.
Yeah, thank you very much. So, sir, so in that case, this office building is actually getting reflected where in your balance sheet?
Where is the office building reflected in the balance sheet?
That capital working progress. Yes. The new property which we purchased for our office is reflecting in capital working process.
तो मेहता जी 14 crore रुपए तो मेरा हुआ, 14 crores is actually my office, 15-20 crores is what you have said you have spent on the plant. That makes around 30 crores. CWIP is only 18.9 crores. तो मिसिंग कहाँ पर है सर?
ये 14 crore 30 crore का पार्ट नहीं है कैपिटल वर्किंग प्रोसेस. That 14 crore is excluding from the 30 CR. After 30 CRs, approximate 4 crore is lying in loans and advances, and 12 CR we have paid a loan to subsidiary company, and we have bought the shares of the subsidiary company around 1.26. That will make 14 crore we spent in acquiring the factory in SEZ, and 4 CR we have already spent on purchasing of land in Mudra. So that amounts to 18 CR.
Okay. Okay. Sir, FY21 annual report, your loans and advances, I would say all your current assets put together, apart from cash of around 6 crores, you had 32 crores of FD as well. If you can inform what is the FD amount standing in the balance sheet as of now?
As of now, it's 15 CR.
15 crores of FD apart from
15 CR.
the two.
That's FD and in current account.
Okay, this is helpful, sir. My next question would be, sir, somewhere during the conversation you mentioned that that you are looking at some of the M&As as well, and you are talking or in talks with, let's say, some of the European companies. So, so what would be the simple thought process behind M&A? Would it be the technology access that you would want? Would it be the plant that you would want? Or is it the technical manpower that they have? So let's say if at all you decide to go ahead with any kind of M&A, what would be the basic thought process behind that?
Well, the basic purpose is, one, like you said, is to get the new technology, and plus the companies we are looking at, they are having reasonable amount of revenues and profits. So it is all three of them: the technology, the revenues, and the profits, and a inroad to European markets for our products.
But sir, in Europe there is no production of oil. Sorry, I mean I listen.
So we'll have to move to the next question, sir. We have
Sure.
participants waiting.
Sure, madam. Thank you.
Thank you. We have the next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
So my question is on the typical order size. If you can talk about in PSUs versus private India players versus international markets. What is the typical order size we see in these three segments?
Well, actually the order size varies quite a bit. See, we have received orders of 120 crores in one go. But a typical order size, I would say, in a government company will be around 20 to 25 crores. In a private company, it may be around 5 crores. And in the international market, it may be 2 to 3 crores or 1 to 3 crores.
So, sir, when we talk about we have bid for 200 crore in domestic market and 100 crore in export, what is the total number of orders in domestic and export which we have bid for?
Total number of orders, quantity-wise or value-wise?
Quantity. No, quantity. Number.
Well, I am just guessing. It may be approximately, I would say, 20 to 25 orders. Between 25 to 50 orders, actually. Let me just correct it.
if you can break up in export and domestic. So export mein for 100 crore bids, what was the rough number of orders in export market which we have bid for?
10 to 15 CR out of 100.
No. I am asking, so 100 crore orders which we have bid for, which we have not won yet, उसमें total number of orders कितने थे?
Total number of bids कितनी थी?
Bids कितनी थी for 100 crore के order which we have bid?
We'll have to check and let you know. I can give you a wild guess number, but it should be around, I think, 20 to 25 crores, which we have bid.
20 to 25 bids, right?
Yes, correct. Oh, you're saying number of bids?
Number of bids, sir.
Oh, yeah. Number of bids will be around 15 to 20.
For only the export market?
For only the export market, yes.
Okay. And domestic mein, the size is more, so the number of bids will be lower. Maybe 5, right. 10 only.
Yes, please. Domestic will be around also 25. 20.
Okay, sir. And out of the 100 crore which we have won, you said 80-85 crore is domestic orders. So, isme the split between PSU and private players?
Yes, please. Are you asking that how much is the private and how much are the domestic?
Yes. Yes, private players and public PSU.
Yes.
Domestic.
We'll have to check and let you know, sir. How much is the private and how much is the government? 100 crore the domestic. How much is the?
This is the operator, sir. We are unable to hear you. The management line.
Yeah, sorry. Actually, the numbers are not with us. We can share that later on, please.
Sure. So my question was more on the broader side. So if our understanding is correct, most of the orders will be from PSU companies, right, sir?
No, actually now, yeah, we are getting quite a few orders from private companies also, besides PSU companies.
Sure. You had talked about that government has mandated or asked them to do more, increase the output.
Yes, please. Yes.
So you are seeing traction from both private and domestic players.
Yes, please. Mm-hmm. Yeah. There is increase in oil production both from government as well as private players.
Sure, sir. And that is it from my side. Thank you.
Yeah, thank you. Before we take the next question, we would request the participants in the queue to limit their questions to 2 during the initial round. We have the next question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Just the earlier participant was asking about the European M&A, sir. What was the thought process? What is the thought process behind it, and what are we actually aiming in the inroads for the European market, sir, currently?
As stated before, all 3 reasons for us to look into European market is, one is we want to get into the European market. Secondly, to get technology, the latest technology which is there, and also the technical know-how, and also increase our revenues and profits.
Okay, because exploration activities are not in that geography. Exploration activities will happen outside Europe. So we will be only the technological partner we are hiring, sir, when you're looking for?
So a lot of these European companies have supplies all around. They don't
Yes.
which is there. So it could be North Sea, it could be Middle East, it could be North Africa. So if we have a technical tab, or not a tab, but a company in Europe, that will help in enhancing the market for us.
Correct, sir. And when are we going to hear about it? Are they in initial stages, or we are on a confirmatory part, and now we have done the due diligence and everything? Where are we?
They are right now in the initial stages right now.
In the initial stages only. Sir, lastly, sir, on this dividend payout part also, sir, do we have any, we have codified dividend distribution policy? We had an EPS of 24 rupees 80 paisa, and 2 rupees 10 paisa was distributed as dividend.
Board decide how much dividend has to be paid.
Yes, sir, you are right, sir.
All of the board of directors.
Yes, but we are seeing the practice that there are now dividend distribution policies being framed by the board of the companies, so that investors will have a very fair idea of on the basis of the performance, that what kind of dividend payout would happen to them. So we request the board to calibrate and deliberate on codifying the dividend distribution policy, and also looking for, sir, since the nature of the business, we can also look for higher dividend payout going forward for the investor community. That was the suggestion practically.
Yes, actually, we are working on such a policy right now. So, but based on the future expansion and the way how market is going, right now we have declared 21%, and in future we are working on that kind of a policy also.
Correct, sir. And lastly, on the other expenses part, what constitutes this other expenses component, and how much is variable, what portion is fixed?
This is the manufacturing cost, administrative cost, selling cost. These three are the main categories in this other expenses.
Okay. So it will have both the fixed as well as the variable component. Right. Thank you for all the answers, and all the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question, and we will now close the question queue. I would like to hand the conference back to the management for closing comments. Please go ahead, sir.
I thank Anand Rathi Share and Stock Brokers and Rahul Jainji for organizing this event, and I thank you all the participants for giving us a chance to present ourselves. For any queries which were left unanswered, please feel free to contact us through email or phone, and we will be happy to reply to your various questions. Thank you so much from the whole UDTL team. Thank you.
Thank you, gentlemen of the management. Thank you, Mr. Jain. Ladies and gentlemen, on behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.